Just a warm welcome to everyone who's joined us since the last session. A warm welcome to Lau Horsley. She's the head of FinTech at the South African Reserve Bank, and she's going to help us understand regulatory sandboxes in the context of innovation of payments. Very welcome, Lau.
Thank you very much. And good afternoon. And thank you so much for having me. It really is a pleasure to be here today. So my presentation will look at regulatory sandboxes, and then also discuss regulatory sandboxes in the context of South Africa and what we have under our Intergovernmental FinTech Working Group, because I think any discussion that looks at how sandboxes can potentially support payments innovation would need to understand our regulatory sandbox and either leverage off that or look to extract the lessons from our sandbox to improve on how we've designed it. And then I'll look briefly at some international experience as well, and then see what we can learn from a payments innovation perspective, especially given where we are in our payments journey in South Africa and how we can potentially use sandboxes to drive innovation in this space. So if we look at regulatory sandboxes, so as regulators, I think we have to walk a very fine line and strike a very delicate balance, right? So on the one hand, as regulators, you need to meet your public policy objectives. And depending on what your mandate is as a regulator, those objectives will vary. So it ranges from things like addressing money laundering and terrorist financing risks to protecting financial consumers, to looking at safety and soundness of financial institutions. And on the other hand, as a regulator, you also do need to be mindful of innovation. And you do need to be thinking about how you can support innovation and not undermine innovation. And so this is a very delicate, fine balance that regulators need to strike, right? On the other hand, we know that in the market, there are incumbents, there are disruptors, and they are looking to bring products to the market in a more efficient way, in a more accessible way, in a more seamless way, in a way that they can drive down costs and bring competition into the space. And so the question for regulators is, so how do you constructively and very deliberately get closer to that innovation? And so I think there are different ways that you can do that. The one is you can do something which sounds quite old-fashioned. You can reach out to a financial institution or to a fintech player and say, hey, I'd like to know more about your business model, and I'd like to understand it a little bit better. And that seems to be something that happens quite rarely. Personally, I like to do that. As a head of fintech, I often reach out to fintech players and say, I'd like to understand more about what it is that you're doing so that we can understand a little bit better. The second one is you can set up a dedicated fintech unit. So the SARB has done this. Our financial sector conduct regulator has done this. So they have a dedicated fintech team. We are a fintech team in the SARB as well. And so we look to proactively engage with the market, see what the emerging business models are, and then have engagements with our regulators to help them see the way things are changing, the way the landscape is evolving, so that they can be more informed in terms of the way that they go forward. The third one is that you can set up something like an interagency forum where you bring different regulators together to try and drive towards policy cohesion on fintech matters. And so we've done this in South Africa through our Intergovernmental FinTech Working Group. And in theory, at least, these kind of interagency forums should strive or drive towards some kind of alignment on fintech issues. The other area is, or the fourth thing, and this is not an exhaustive list, right? This is just focused on what we've done in South Africa. You can set up a regulatory sandbox. And so when we think about regulatory sandboxes, then I like this definition from an IMF paper, which they published earlier this year, which describes sandboxes as resource-intensive, hypothesis-led initiatives that allow for firms to test innovative propositions within a controlled environment with real-life consumers. And so the idea with the regulatory sandbox then is that it allows the regulators to get closer to innovation. It allows them to test these new products that challenge the regulatory environment. So either the product doesn't fit within the regulatory framework, or it doesn't quite neatly fit into that regulatory framework. And you do this in a controlled manner and under the supervision of the relevant regulatory agencies. And so when we look at the way we've structured our sandbox in the IFWG, so this was launched in April 2020. I think that may have been in like the hard lockdown period. It was launched digitally, and it was launched following this cohort-based approach, which just means that the sandbox is open for a period of time, and then it closes, it takes applications in, and then it opens up again at a different point in time. And so the purpose with the sandbox then is to respond to this transformational innovation. So it's not there to respond to all kinds of innovation. It's those innovations that do push the boundary, that don't fit within the regulatory framework, and in respect of which there's not a similar kind of product or offering in the market. The idea here is that you do expedite the regulator's understanding of the innovation. And so if the regulators were to do those bilateral discussions where they phone the fintech up and say, I want to understand your business model, that would probably take a little bit longer for regulators to wrap their head around what the innovation is. But the idea with the sandbox is that you would expedite that understanding, and then you would expedite the regulatory response in terms of how you respond to that kind of innovation. And if we look then at the applications and what we received, so we received a total of 54 applications, 9 applications into the sandbox. And if you look at the breakdown of the applications that we received, we see that the payment segment was the higher segment at 28%. And then we had crypto assets and the cross-border payments. So those were the 3 leading segments that we saw. A number of the applicants don't make it past that initial review that we do of the application. So you get assessed against criteria to see whether you can enter the regulatory sandbox, and there's a review that gets done. But most of the applicants fell out because they didn't align with the regulatory priorities that the regulators had. So if we look at that in this way, we'll see there that this no regulatory appetite was really the main reason for applications not making it into the regulatory sandbox. And so when we think about how can we drive or use your regulatory sandboxes to drive innovation, there really does need to be clarity from the regulator's perspective in terms of what are the priorities that they want to see, what are the things that they want to drive within the sector, so that you can have that alignment between business cases that then meet those regulatory priorities. The other reasons for the declines were around not meeting the entry criteria, contracting terms that couldn't be agreed and so forth. But I think what is striking in our case is this lack of alignment with regulatory priorities or regulatory appetite. And if we look then at the themes that emerged from our first cohort, we see that there were cross-border payments, crypto assets, crowdfunding, insurance, and so forth. And what's interesting is if we look at from the previous slide, when we had 28% of the applications in the payment space, when we then see, what went into the sandbox and the themes, we see that there are no payment use cases except for the cross-border payment use case. And that's again based on that regulatory appetite and what the regulator wanted to see within the regulatory sandbox. And so where we are now, then following a retrospective that was done in terms of what worked in cohort 1 and what didn't work, we have made some changes to our regulatory sandbox. One of the things that emerged was that it does take very long to actually assess these sandbox applications. So you receive the application, you assess it against the criteria, and then you have to figure out, well, who's the lead regulator in this use case? Because there are multiple regulators in South Africa. Payments itself sits across, there's a conduct regulator, there's the payments regulator, there's an AML CFT component with payments. And so just to have alignment across the different regulatory agencies does take time to figure out who's going to lead on a specific use case. And so there were some adjustments that we made. The biggest one was to move from this cohort-based approach, where we open the sandbox for specific periods of time during a year, to moving to an adjusted rolling-based approach, where the sandbox, at least in theory, is open throughout the year. And I say an adjusted rolling-based approach because, again, it doesn't mean that you could just simply submit applications throughout the year. It does depend on capacity. So if the regulators feel that they are being inundated with specific applications and it is having a significant impact from a resourcing perspective, then we will indicate that the sandbox is closed in respect of specific use cases or with respect to a specific regulator. And we also are looking to direct the applications in a more deliberate way, where the regulators then articulate, well, what is it that they want to see testing in the regulatory sandbox, and we are then able to guide the applicants to say, well, these are what the regulatory priorities are, and this is what the regulators would then want to test within the regulatory sandbox. But what we've seen play out is that a number of the regulators have actually not articulated what their priorities are. And so if you look on the IFWG's website, for instance, you'll see that a number of them indicate that they will assess the applications on a case-by-case basis. The payments department has indicated that they have an interest in domestic stable coins that are used for payments. So there's some indication to market around where their interests are. But I think the other regulators equally could be more deliberate to the extent that they, do have a sense around what they want to test in a sandbox to provide that kind of steer to the market. And so in moving to this new approach, the overall process of the sandbox really hasn't changed. So it's still the planning that gets done by the IFWG team. You still receive the applications and you shortlist them. You then enter into this contracting phase where you enter into a contract with the innovator. You then do the testing and the reporting. And the reporting would all be set out in the contract that you do. And then there's a closeout in terms of what was learned, what's the way forward, and what's the regulatory treatment that this kind of innovation would get. If we just look at the eligibility criteria then, so this kind of eligibility criteria, I think even if you were to look at driving kind of payments innovation, this eligibility criteria would still at least be the starting point. So it must be deployed in South Africa. It must not clearly fit within the regulatory parameters. So it's not, if you are clear in terms of what's the regulatory treatment, then there's no need to enter the sandbox, because there's no need for us to then understand what kind of framework we must be applying to that kind of innovation. It must be of benefit to consumers or to the South African market. It must be significantly different from other innovations that we see in the market. It must be ready to be tested. So you must have your technology stack ready to be put in a live environment. There mustn't still be elements of it that need to be developed that aren't ready to be tested. You must have sufficient funding to enter the sandbox. So we've often been asked whether the IFWG provides funding to test in the sandbox. So the IFWG doesn't provide funding. We do think that there's potentially a conflict if regulators were to provide funding to innovators and then subsequently regulate those innovators. So we do say that there are other initiatives, other programs outside of the IFWG structure where innovators can obtain funding, whether it's through incubators or DFIs. So the funding component doesn't get addressed at the IFWG level. In addition, you should also have all your partners ready to test with you. So if it is in the current world that you need to partner with a bank for purposes of pooling funds, then you need to have those arrangements in place before you sign up or submit your application to the IFWG. And then for cross-border testing, the applicant must either prove that they have a license from that foreign regulator or that they've obtained some kind of letter of good standing for them to test in our regulatory sandbox. And so if we look at the applications, as I mentioned, most of them currently do get assessed on this case-by-case basis. I think there is room for regulators to provide clarity around specific priority areas or themes that they are interested in. It is also based on whether regulators are actually able to provide you with regulatory relief. And so I think in that way, the South African sandbox is a bit unique in that there's no legal construct which establishes the regulatory sandbox, as we've seen in other jurisdictions like Mauritius and Brazil, for instance. And so the powers that regulators can grant for you to enter the sandbox, that's based on the kind of frameworks under which they are established or where they derive their powers from. So for instance, the Revenue Service has indicated that they are unable to provide any kind of relief in terms of waivers or exemptions or those kinds of things. But what they could look to do is provide these private non-binding opinions around the potential tax implications of a particular innovation. Similarly, with our credit regulator, they've indicated that they don't provide any kind of exemption from the Credit Act, but what they could do is provide you with some kind of conditions on which conditions that you'll be granted once you are licensed as a credit provider. And so there are different regulators have different kind of levers that they can leverage for purposes of allowing innovation to go into the regulatory sandbox. The sandbox then does determine your scope of testing, your exit strategy. So how do you exit the sandbox? How do you make your consumers whole again after all has been said and done? And you don't just, it's not automatic that testing leads to a license. So all of that stuff gets dealt with in the contracting phase and in the testing plan and all of those things. As I mentioned, there is then a closeout report. So the innovator produces a closeout report to say, this is what we've learned. This is the kind of regulatory treatment we think this innovation should get. The regulator then assesses that. They discuss it with the other regulatory agencies. And they then make an assessment in terms of how they think this regulation should be taken forward. And what's important to remember as well is that the decision maker is still the regulator. Oftentimes we get asked as the IFWG, and I also chair the IFWG, when are you going to decide on a particular use case? How is it going to be treated from a regulatory perspective? It's not for the IFWG to decide, right? So because the IFWG is not, as I mentioned, grounded in kind of a statute, it's set up under this MOU amongst the IFWG members, it doesn't have powers to grant those kinds of exemptions. So it still sits with your regulators that are able to provide you with regulatory relief and then direct you in terms of the way forward after your testing has concluded. And so just some general reflections on our IFWG sandbox and where we are. So as I mentioned, it's not innovation theater. So oftentimes we say 54 applications were submitted, 9 went into testing, and people say, gosh, that's such a big difference. Like, why did you guys not test more? So it's not about how many applicants go into the sandbox. The metric isn't a numerical one to say the more you test, the better the sandbox performs. It really is about those use cases that test the boundaries of innovation and where the regulators are clear that they would want to effect some kind of change in the market after something is tested in the sandbox. As I mentioned, entrance remains at the discretion of the regulators. We facilitate the overall process at the IFWG level, but it remains subject to the regulators in terms of granting regulatory relief that allows you to test in the sandbox. I've mentioned the point around innovators that must have this alignment with regulatory focus. I think that really leads to kind of the maximum benefit that you extract from a regulatory sandbox. And then the participation in the sandbox, it is resource intensive. It's resource intensive on our side as regulators. It's resource intensive for the innovator as well. And it does cost you money. The testing typically takes 6 months. Sometimes it can go longer. One use case, I think, tested for about 18 to 20 months. So it is a resource intensive process, and it does end up costing money as well. So if we look then at the international context and what we've seen from regulatory sandboxes from other jurisdictions. So this term sandbox, regulatory sandbox, it became popular, I think, in around June 2016. with the UK's FCA and their regulatory sandbox. Since then, we've seen that over 95 sandboxes have launched, and it's particularly in the emerging markets and the developing economies where sandboxes do seem to be growing in popularity. The common objectives around the sandbox, it is to foster innovation. It is around looking at how you can manage risks while enabling a particular kind of innovation. It is about accelerating the regulator's understanding of a particular innovation. So typically as regulators, I've been in many forums where I've heard that regulators are very slow and we don't know how to respond to innovation. So this is just one enablement that allows us to get closer to that innovation, and more importantly, I think, allows us to develop a deeper understanding around a potential new business model. And the idea then is that we do use those learnings and insights to drive a change within the market through the regulatory framework and the policy direction that we can set as regulators. And so we've seen already that there are these emerging typologies around sandboxes. So it started with the kind of product testing sandbox. But now we see there are things like policy sandboxes. We see that there are digital sandboxes. There are cross-border sandboxes. There are cross-sector sandboxes. And so I think there is innovation even within the sandbox space to see how we can be more targeted in the way we're thinking about sandboxes. And if we look then at some common elements that you can extract across different regulatory sandboxes around the world, and you'll see then that South Africa, from this perspective, I think is aligned to sort of best international practice. The idea with the sandbox is that you do go into this live controlled testing environment. So it's different from like something like a tech sprint where you're looking to solve a particular problem and you get given a period of time. This is you're in a live environment, the product is being offered to the market, but there are parameters within which that is done. There is then the oversight and the supervision by the regulatory agencies. So it's probably one of the better forms of collaboration that you can have between your regulators and your industry, because there is this dialogue that needs to happen between the regulator and the innovator around the testing, around the conditions, around what's happening, and then the monitoring of how the innovation is playing out in the market. It does take place within a limited time frame, so it's not an indefinite thing. We typically look to have testing for about 6 months. In some instances, there can be extensions on that. It does depend on the use case as well. There are then conditions or restrictions placed on the testing. So that's really important in terms of providing that support or protection to consumers. And so we'll see that in the contracting phase, we either limit how many consumers can take up the product. Sometimes there are capital requirements that get imposed on an innovator. We've seen, for instance, in India, they require the innovator to have indemnity insurance so that they're covered for any of the liability that potentially arises from the use case. So there are different things and ways that regulators do look to manage the protection to the consumer and to the overall ecosystem in case things do go wrong during the testing. And then there are the reporting obligations that would be imposed as well. And those are either sort of bi-weekly reports that need to be issued together with the final closeout report at the end of testing and the closeout strategy in terms of how that will exit the market. The approach to sandboxes then, so if you look at these regulatory levers that regulators have in terms of what can they do to get things into a sandbox, as I mentioned, in the South African context, it does depend on what powers a regulator does have, right? So if their kind of founding legislation or where they derive their power from doesn't permit them to grant exemptions or doesn't permit them to issue some kind of waivers, then those regulators will not be able to do those kinds of things, only to facilitate something into a sandbox. But if we look at sort of international practice and what other regulators or what we've seen from other sandboxes, it is this idea that you do get granted a waiver and exemption, a letter of no objection that gets issued to you to say you will be permitted to enter the sandbox for this limited period of time. There is also tailored guidance that can get issued to the innovator to say this kind of innovation we will treat in this particular way. These are the kinds of regulatory requirements that you still need to be mindful of. So typically, even though you get exempt to enter, you get exempt from certain frameworks, when you're testing in the sandbox, you would still need to comply with those anti-money laundering and KYC requirements while you are testing. You could also say that you will not take any kind of disciplinary action if things do go wrong. So they enter in good faith, and you as a regulator will not take any kind of action against that innovator when things do go wrong within the regulatory sandbox. You can then also look to develop some kind of proportional response to reduce the regulatory burden. So we'll say that we will allow you to enter the sandbox, but maybe you don't have to do full KYC, or you don't have to do full reporting, or you don't have to do, a full set of whatever the requirements are. So that's another way where regulators, another lever that they could potentially use to allow you to enter the sandbox. So as I mentioned, this is based on just international practice. It's not to say that these are the levers that our regulators have in the South African context. The one caution, there are a few cautions, but the one caution with regulatory sandboxes is this idea that you then limit the regulatory requirements or the standards for a particular innovator, and that there are concerns around regulatory arbitrage and those kinds of things. My sense of it is, so yes, you would limit the requirements, but you do it for a limited period of time. You do set out the parameters and the rules of the game for a while they test within that regulatory sandbox. The idea is that once they come out of that sandbox, if it's then clear what license they need or what kind of regulatory framework they would be subjected to, or the regulator is going to develop a bespoke set of rules for that kind of innovation, or the regulator is going to adapt the existing rules for that kind of innovation, you would then need to comply with those set of rules, either bespoke or amended set of rules, right? So the testing in the sandbox is a limited reprieve for a duration of time. But the idea would be then once you come out of it, that the regulatory framework is clear to you, that you then do have to comply with that regulatory framework. We've also had some discussions internally to say, if we do allow firms to enter into the market, it's not a promotional opportunity to say, I've entered into the sandbox and so I'm going to get licensed, or, I'm permitted to provide this product into the market in an unlimited way. So it's not that, right? It's not to be used as a promotional opportunity. And also the idea is that if one firm tests, that firm, the learnings from that firm would benefit the whole market. So if it is a payments use case that wants to test, it's not about, we need 20 payments firms to test in the sandbox. It is to say, let's test this innovation. Let's have one firm go through it from a resource perspective, from a cost perspective. But those learnings that firm then brings would be benefit to the whole market. So the rules would change for the whole market. A new framework would be developed for the whole market. And so it is that it's a market innovation at the end of the day that you look to support. So if we look at some regulatory sandboxes in other jurisdictions, so I'll just focus on Brazil and India, partly because I think in our rapid payment system, we were heavily influenced by Brazil and India, and also because they are part of the BRICS, so it kind of makes sense to look at Brazil and India. So Brazil, I think what they did quite well was set out these strategic priorities that they want to focus on. So you'll see there that they have solutions for the foreign exchange market. They want to foster the capital market and the credit market. And then they have specific things around open banking, around the instant payment scheme that they've got. So they were very deliberate and targeted in terms of saying these are the kinds of priorities that we have from a regulatory sandbox perspective. And these are the kinds of innovations that we want to see. And in that way, they then drive the market in a particular way to support the regulatory outcomes that they want and the broader innovation within the market. If we look then at India, India similarly provided this indicative list of products or services or technologies that they want to see within their within the regulatory sandbox. And so India developed these cohorts to provide direction and clarity to their market. So they had cohort 1, which was focused on retail payments. They had cohort 2, which looked at cross-border payments. Cohort 3, which looked at SMME lending, and cohort 4, which looked at fraud and preventing fraud within digital payments. So a very direct, targeted way to say to the market, these are the innovations that we are interested in seeing. And those cohorts or those priorities then speak to a broader strategic initiative that they have around digitizing payments and bringing modernization to the financial sector. And then they also had a list of things that they said they don't want to see. And one of the things was crypto assets. So India has said, we are not interested in crypto assets testing in our regulatory sandbox. They are interested in some of the underlying technologies, so DLT-based innovation, but not crypto assets per se. And based on the learnings from cohort 1 that India did with their retail payments, we've seen that 5 out of the 6 firms that were accepted for cohort 1 have then taken their product to market. And so if we think about what are the success factors around regulatory sandboxes, we've seen at least there that the products that tested do then end up going to the market. And India has also developed a specific framework that looks at small value digital payments in offline mode. So they've developed a specific framework in response to what they saw as part of the testing that took place in cohort 1. And so what are some of the thoughts then around how sandboxes could potentially support innovation? So we have a lot of discussions internally about how effective sandboxes are. And I think that they do provide a useful mechanism for regulators and innovators to test and learn, and to gain a more accurate understanding around how an innovation happens or what the underlying business model is that you're looking to test. And I think it does so in a more direct way than some traditional mechanisms may get you there in terms of, having workshops, having discussions, and all of those things. I think if you can be in a live, practical environment, you gain very good insights as a regulator. It is then an opportunity for a joint sense-making, so a dialogue to happen between regulators and innovators. And we know that one of the criticisms that fintechs often relay towards central banks or regulators is that we can't get close to you. So we are unable to reach you, we are unable to understand, things from a regulator's perspective. So I think regulatory sandboxes again allow for a collaboration, a joint sense-making, and a mutual upskilling between the two parties or the parties that enter the regulatory sandbox. The innovators get to understand things from a central bank or a financial sector regulator perspective, and regulators get to understand how innovators work and how they may be different to incumbent financial institutions, and how as regulators we may need to be thinking differently about how we regulate and think about innovation. So there's that mutual kind of learning that can happen. It does allow a better understanding not only of the potential benefits, but also of the risks. So oftentimes, when we think about, well, should something go into the regulatory sandbox, we have this discussion to say, well, if we are not clear in terms of what's the regulatory treatment that we would want to give this thing, it may not be suitable to put it into a regulatory sandbox. My sense of it is that you can also test what you don't want to see. So it's okay to bring things into a sandbox, and if we see that this particular business model is particularly risky, it's not something that you would actually want to see in your market, you can also extract those kind of learnings and insights from your regulatory sandbox. It does require organizational buy-in though, and we've seen this from our perspective in the central bank as well. So for you to extract maximum value from this regulatory sandbox, I think there does need to be buy-in from a senior level because it is resource intensive. So you need to make people in your departments understand that there is a value in participating in this thing. It can be something that you think about from a strategic perspective. If you want to drive industry in a particular way strategically, how do you then articulate what those priorities are? And how do you then enable the industry, or you provide them with that clarity to say, these are the kinds of innovations that we want to see. This is what we're driving towards as a regulator. And we think that these innovations can potentially help us to either figure out what we don't want to see or what we really like and want to see, and how we can then respond appropriately with a set of rules that does support the innovation that we want to see in the market. I mentioned that there are cost implications, again, for firms that do want to enter the regulatory sandbox. And again, I think there is an opportunity for a broader ecosystem to develop that says, well, how do we support these new disruptors and innovators through funding, through kind of business support services, so that we can support them to enter into something like a regulatory sandbox. So how do we drive the venture firms and their capital going into these kinds of firms, or how do you develop this broader incubator framework in South Africa, so that one of the things that those kind of programs look to do is to provide support to fintechs that look to want to enter the regulatory sandbox. I've touched on this thing around, we've often, or there have been times when the critique has been, why do we allow incumbents to enter the regulatory sandbox? Shouldn't the sandbox be for disruptors? The idea is the sandbox isn't there to benefit the entity that's entered the sandbox. It's there to benefit the ecosystem. So if you have an incumbent that's looking to test an innovation, they've got the funds, they've got the resources, and that innovation will then provide broader clarity to market. Then I think you can, it's fine to allow an incumbent to test in the sandbox, and we need to make sure that those learnings are then transparently made available to the market, but also shapes the regulatory outcome. And then, as I mentioned, we do see the emergence of these new kind of innovative sandboxes that are coming up. And again, I think it would look to be for us as South Africans to say, so is the design of the sandbox that we have the optimal way to do it? Are there other ways that we could look to do it? So if we were to support payments innovation, is there ways that we can potentially have a thematic sandbox that looks at payment innovation? Is there a way to think about a policy sandbox where we look to test some of our policy thinking and frameworks in a particular sandbox environment? This is all my thinking, right? These are not things that will be approved by the regulators, but just in terms of us being creative around how do we leverage these things to drive towards the strategic outcomes that we want. And then just in terms of some concluding thoughts. So I think where we are in our sandbox, we launched in 2020. We are now in 2023. It's early days. It will still develop. It still needs to mature. I think we need to have a dialogue around what's working and around what's not working. The emergence of new payment use cases, a new payments policy that's being developed. I think there's really a big shift that's coming in the payments landscape. And then to see how do we potentially use sandboxes to support that? How can we provide clarity around some of the things that we want to see, around the innovations that we are interested in, and how can we be agile in terms of adjusting as regulators as we see the market shaping and going in particular directions? How can we be more responsive to that and leverage sandboxes potentially to drive some of our policy and regulatory priorities? There is this rise of outcomes-based regulation, which specifies the outcome, so it's less about set of rules that you have to meet. And the question is whether that potentially does create more of an environment where you could potentially test new things, provided you meet the outcomes of what the regulation is looking to achieve, but it allows you with a little bit more flexibility to not be too scared about, circumventing a set of prescribed rules as they are set out. And then to say that sandboxes are not a silver bullet, right? So it's often not one thing that's going to change the whole ecosystem. But I think it is an important lever that we can potentially look to lean into a little bit more, to be more strategic around how we approach our regulatory sandboxes in South Africa. But I think ultimately the big shifts and changes come when you do have coordination amongst the different regulatory agencies. In South Africa, we do have this multiple regulatory environment. And when you have clarity from those multiple regulators, where they either are able to speak with one voice or to speak in different voices, but off the same hymn sheet. And that often does also go a long way in driving policy and regulatory clarity. I'll stop there. I know we have 5 minutes, I see, and I know lunch is also waiting. But I'm open for questions. I'm supposed to have Slido. I'm not sure where it is, but I'm also happy to just take questions from the floor and we can facilitate those as well. Thank you very much.
Thank you very much, Lyle. Any questions from the floor? Nothing?
They've all gone into Slido and I can't see them, so that's fantastic.
Thank you very much. Then I'm going to conclude. Yes?
Yes, so we've published a feedback report from the first cohort. We do indicate on the IFWG website the firms that have entered the sandbox, so we name them by name, and we give a brief description in terms of what the use case is about. The learnings are also, for me, very important that those do get published, and so as things close on testing, we will then look to develop maybe annual reports. I know Brazil does annual reports. So the transparency, I think, is very important for us. So yes, on the website, that information is there. Yes.
How has it impacted or inhibited the innovation that you guys see in the industry and obviously the increased regulation that brings?
So from my perspective, we haven't seen anything specifically. There may be some additional due diligence that firms need to do to get access to funding. But I think in terms of the innovation and the things we've seen, it certainly hasn't been raised as a constraint so far. Yeah, that's been my perspective. There is a blog that was written recently that I co-authored on how the grey listing affects fintechs. So maybe that will have useful insight as well.
Hi, Lyle.
You're not allowed to ask a question from the central bank. I'm joking.
I think my question is any recommendations for policymakers on how to amend the entry criteria to be more forward-looking on the changes they're going to make in the regulatory framework as opposed to what is currently there right now, so that it encourages more participation by forward-looking on what the changes are coming instead of what the current landscape is, because it's institutional-based, but the changes are more activity-based.
Yeah. So I think there is a great opportunity for regulators to potentially sit with like a fintech unit, to sit with the incumbent. So if you have a sense of how the emerging business models are coming through and what they're shaping up to be, then I think there is a way to be a little bit more targeted around what it is that you would want to see through the entry criteria. So if it is that you're looking for fintechs that have specific that operate in a specific way, or you want to be very direct in terms of what it is that you want to see, their capabilities. So if it is that they must have, I don't know, like some kind of specific fraud capability or whatever the case may be, I think there's definitely a space for regulators to work with their innovation teams so that those kinds of criteria can be more crafted so that you potentially do attract the right kind of, or the new kind of entrants that you want to see in your market, so that you can test and see how things potentially, how your regulatory framework would need to adjust or expand or contract, depending on what those new innovations are. I've kind of answered you, I know, but it's fine.
Anybody else? Okay, thank you very much, Lal. That was very interesting. I
Thank you
enjoyed
very
it.
much, everybody.
Thank
Cheers.
you.